Hello and good morning. My name is Philip Coombs and we are ready to get going with today's event where I have the pleasure of welcoming Rivertech back to the HC Andersen Capital platform. Today I'm joined by Rivertech CEO Luke Chantar and Rivertech CSO Sean Bazina. Today they will be presenting the half one results and I'll pass over to them in a minute, but before I do so, I'd like to thank all of the viewers for joining us today and give a friendly reminder that you can ask questions throughout the presentation down in the chat to your right-hand side. That's everything from me. So, Luke, I'd like to pass it over to you to give the presentation.
Thank you, Philip. Thanks for the introduction. I'll start off with a light introduction about who Rivertech is for the new viewers to the platform and to Rivertech. Rivertech is a B2B technology provider, started off in the iGaming sphere and now venturing into other sectors. We strive and we have clear focus to build and support innovative technology solutions to support our clients and our client base. I'm happy to be here today after another highly successful half year, and I look back with great satisfaction on the results we've achieved by the whole Rivertech team. In doing so, I can share with the market that we will be paying off all our loans by Q2 2023. And in turn, by doing so, we'll become a dividend-paying company. We're also working on attracting new customers and assignments, and we're announcing further details with regards to a particular project that we'll be working on in the coming weeks. Obviously, the first financial year, half the financial year has portrayed clear and positive results, and that is helping us with our sustained growth. As ever, the goal for us is to be a leading B2B tech provider. By utilizing the latest and greatest cutting-edge technologies, we are focusing on multiple areas, beginning with the sportsbook offering. We are finalizing agreements with multiple award-winning sportsbook partners to ensure that the content and space of the solution that we provide to our clients is tailored to meet the requirements. We're also working on another key project that, as I mentioned earlier, this is a website management system. This basically will give the clients a solution to be able to deploy and manage a number of websites from a central back office, so to speak. In doing so, it will facilitate their day-to-day life in order to, firstly, bring the sites live, and secondly, manage the content to these sites more efficiently. And last but not least, we strive to be the best in every aspect of the technology that we build, and security and compliance is part of being the best. So we're investing time and resources to ensure that our offerings are in line with international best practices. This safeguards our clients from any threat in the cybersphere. And following that, I now hand over to Sean to give you an overview of financials.
Thank you, Luke. Thank you, Philip. Thank you both for having me, and thank you for the listeners who have joined this presentation. I'm presenting today as our CFO is currently on maternity leave. We wish her all the best and will welcome her back in the next presentation. I had been CFO of the company for the first few years, and I handed over to Daniela last year, where she took over the mantle. This first half year, I will present the financial results for the group. We want to first focus on the revenue split. So as we've been doing quarter over quarter, we continue to improve our results. We continue to achieve record numbers for the group, and we continue to add further services in what we are providing to our clients. What we can see, what was pivotal in 2022 is that we grew the license revenue, whereby in 2021 it was stable. We were growing our service support function. Now we have also grown our license revenue, and the aim is to add more business verticals so that we continue to grow the revenue in the future as well, based on the new products that Luke has mentioned. The service support revenue is more based on the current offering that we can handle because of our resources. And as we continue to grow our resources, we will continue to grow the service and support revenue as well in turn with it. When we look at the movement quarter on quarter, the pro forma financials, these are the operating results. What's important to see over here is that as the revenue continued to grow, the operating results, the EBITDA, also grew, but the ratio between cost and revenue continues to improve. So for every €1 of revenue that we add a higher portion of profitability than we had in the past. That's maximizing on the resources that we are recruiting and achieving great revenue numbers. We obviously strive to continue to improve quarter on quarter as we have been doing, and we are working on increasing our revenue as we have mentioned in the past. When I look at the highlights of the interim financial statements, the first half of this year compared to the first half of last year, this slide gives a very good picture of the operation itself. It takes out all the accounting transactions that come in with the financial statements. The interim financial statements are available in their entirety on our website and on the stock exchange for review. And I will add some points about some key main items, key accounting adjustments a little later as well. When we look at the results, when we compare H1 2021 to H1 2022, we can see a significant improvement. A significant improvement because, as we have mentioned, we continue to add revenue. The costs also increase, but at a slower pace. So while we add revenue, we keep our focus on maintaining the cost level that we have had and growing the profitability of the company. As we improve our key ratios, then it will position us, or it will continue to position us into the financial position that we want to be in the future. Going into the interim financial statements, the accounting adjustments, if I were to make a note of some of the differences between 2022 and 2021, when you look at the P&L statement, in 2021, there were two main adjustments over and above the operation, which was the fair value of share options given to key management, and that had a paper impact of 2.3 million euros. It's not a cash transaction, but it impacted the profit before tax. And there was also a gain on final settlement of contingent consideration based on a prior acquisition. We had negotiated the price so that the final payment was less than what was actually contracted. That had a positive impact of 496,000 euros. In 2022, there are two extraordinary items, I call them. One is a bad debt provision. In 2020, we sold our media business, which was not performing. We have a receivable. The new shareholders' aim was to rejuvenate the business and pay off the sale. It has not been performing to the standards that they had expected or we have expected. So as a prudence measure, in agreement with our auditors, we have put in a provision of 400,000 for that. And we also finalized the closure of one of our businesses, one of our past businesses, whereby the liabilities that we actually paid were less than the liabilities on the balance sheet, and we made a gain of 80,000 euros over there. All in all, when you look at the performance between last year and this year, you still see a significant improvement because, as we see in the pro forma, the revenue continued to grow and the profitability also continued to grow. Looking at the balance sheet, there were some significant movements as well. in the balance sheet between December and June. We extended our office lease, which, based on new accounting principles, you have to capitalize the office space and also create a similar liability. That was a movement of 2 million, both on the asset side and the liability side. It has no impact on the operation or on the cash flows, because obviously the rental cost remains what it is. Depending on the contract, we actually did negotiate a longer term contract because of our growth, and reduce the actual cash payment in that transaction. When you look at the equity, we made a very important adjustment in the first half of this year. It was approved by the shareholders in an EGM in June. We touched upon it in our last meeting, whereby we offset the share premium with the accumulated losses, and this reduced the accumulated losses, so it will position us in the future to be able to distribute dividends, which I will speak about a bit more once I conclude this. There's the loan balance, which we have been talking about a lot. We had initially taken out a loan of 15 million. It was reduced up to just under 9 million in December. As at June, it stood just under 6 million. And with the extension that we obtained in May, we shall be settling the full loan, as Luke mentioned, by June 2023. Once we settle that loan, the company will become debt-free. When the company becomes debt-free, the financial strategy of the group is to accumulate profits and distribute part of that in dividends to the shareholders, and retain an amount of profits to reinvest in the company. Obviously, as a company, we do not want to distribute 100%. We shall be presenting the dividend policy over the next year, and going forward, it is the aim to give the shareholders who have supported us through the thick and thin with some return as well. So we first pay off the loan, become financially stable and viable and sustainable, and then start to distribute part of our profits as dividends in the future. Those are the main highlights of the financial results for the first half of this year. I pass over to Philip for the Q&A section of the presentation.
Great. Thank you both, Luke and Sean, for walking us through that presentation. I can see we've got a good number of questions throughout the presentation, so we'll go through those now. There's a few questions asking around dividends, so it makes sense to stay on this topic. And I think you came across the crux of the questions well, but the theme is they're asking, is the decision to pay dividends because there's a lack of growth opportunities, or is it more because you feel without having to pay the loan, you can reinvest in the company and also distribute dividends?
When you look at the results, we made 4 million in profits in the first 6 months. Those profits are practically cash profits. So the aim is to find the balance. We are not going to shy away from any investment that we need to make. The aim is to invest and grow the company, invest in new markets and new business opportunities and new lines of business, so the ones that we had traditionally, but also give shareholders something back. Finding that balance is the aim of the company, and we will find the right policy, obviously starting slower and then growing as we go along in the future.
That's very nice. And there's a question asking about the sustainability of the growth rate. So we can see that there's been strong growth in the first half of this year. How do you see that moving forward? Can the same growth rates be sustained?
The idea is to grow as much as possible, let's say as much as possible. The contracts that we have, some of the licensing contracts are fixed fees with long-term durations, and the clients, the way, because of the product and the bespoke additions that we make to the product, have been loyal to us, and that is highlighted in our churn, which is obviously 0%, because the clients that we've onboarded have stuck with us, and we continue to improve the product with their feedback. I don't see why we cannot continue to grow, and adding more verticals, as Luke mentioned, is the aim, so that we can continue on the same path that we have had so far.
That's great. And sticking on growth, we have a question around your partnership with Tech4s, which we touched on in the last presentation. And could you elaborate a little on how this relationship is at the moment, and whether there are ideas of sales in-house as well as through Tech4s?
Would you like to take it, Luke?
Yes, sure. So we are in, with regards to sales, we are in discussions with a new startup that is setting itself up for and discussing the potential supply of our technology to them. So yes, we are looking to sell directly as Rivetech, not just the licensing deal we have with Tech4s. The relationship with Tech4s is as strong as it's ever been. The communication between us and them and their clients keeps growing and keeps improving. The requests for support and new functionality keep coming in, and obviously the more we improve the product, the better the offering that we'll have as Rivetech, and also as Tech4s being our licensing partner. So yes, growth is on the horizon. That's why we increase our staff, and we focus on specific areas to be able to deliver even different solutions and work with new technologies as the clients and the requirements that come in need.
Very nice. And there's a question which asks specifically about the licensing revenues. So if we go back a few slides to where we have the breakdown between license and service revenues, could you maybe go into a little more detail into what has driven the growth in both these sections for the first half of 2022?
So the first half of 2022, we grew licensing revenue. It was a contract renegotiated for an underlying client, whereby the business of the client grew with the help of the platform, obviously, or with the tech solution that we have. And that growth was reflected in a renegotiation of the rates and an extension of the contract that we already had in place. Reading through the question, in the future, what we're focusing on now is building the new verticals, so we can add new license revenue and new service support revenues. Once we have those products up and running, they will hit both lines of the P&L and grow both sides in the future.
Very nice, thank you. So we have a question about the sportsbook product, which I can go back to the previous slide. So, hold on. Here, so the question is asking, let me just find it. Yeah, is there a timeline for the sportsbook product? And if so, do you have any pipeline of customers for when it's ready to launch?
So yes, we started this initiative internally in order to sort of enhance the iGaming product. We are obviously, just to be clear, we are not building the sportsbook ourselves. We are partnering up with two award-winning sportsbook providers. We're obviously working on a B2B agreement with them in order to increase the product offering for our clients and also Tech4s's clients. The timeline is looking at around Q1, Q2 in 2023 for integration and launch. Obviously, the timelines are not just dependent on us for us to do the technical work. it's also dependent on the clients in order for them to be ready to launch that product. But we want to be ready for any eventuality that the client will need.
That's great. Thank you. We have a question which says, to better understand the growth opportunities, what would your best estimate of your market share within the iGaming software space be?
I wouldn't put an estimate of a market share. Our aim is to become one of the best B2B software providers in the iGaming sphere and other markets, as we have mentioned, and continue to gain market growth. We have been contacted many a times, and we are doing our best to actually support all the requests that we are getting in. So our market share, we are still a small player in the industry, but our market share will continue to grow. And that's the aim, and that's the important thing that we as a company strive for.
That's great. And there's a final question which asks if you see any regulatory risk from being involved in the iGaming space.
Any regulatory risk, we have a compliance team which reviews and takes into consideration all the regulations that we need, all the technical, both from a technical side and from a non-technical side. And we do the necessary studies based on the underlying clients that we have, and we will apply or take up any regulation that we need to.
To continue on that, obviously the way we build our technology, it's all function based and modular in a way, so that we can switch on and off certain aspects of let's call it the regularity part or compliance part of the product that will be catered depending on where the clients want to go. So we can tailor the configuration of said regulatory components to meet the markets where the clients want to go. Yes. So we strive to, and that's why we are investing as well time and resources within the security and compliance part of the product to make sure that we meet the required standards and obviously be ahead of the curve in a way when it comes to the threat landscape that there is in the cybersphere, obviously.
That's very nice, thank you. And we've got through all of the questions in the chat now, and I just have a few questions regarding the major themes in the markets right now, one of which is, of course, inflation. How is inflation affecting your business, and are you able to pass on rising costs to the customers?
We obviously, as Sean said, we do renegotiate contracts depending on the growth of the clients. We reevaluate the costs of our employees and obviously the increases in their salaries in order to keep the right balance between the costs that we have and the charges that we pass on to our clients. They are contracts that are negotiated, as Sean explained. So we do it hand in hand with our clients in order to keep a healthy relationship, right?
That's great. No, thank you. And regarding customer stickiness, we see there's a 0% churn. Have you got any comments on the churn rate and whether this will continue at 0%?
I believe that's testament to the service that we provide to our clients, right? Given that even the licensed clients that are beyond tech for us are still the same ones that have been onboarded. So I believe that shows testament to the service that we provide. Obviously, we would love to keep that churn rate at 0%. Obviously, I can't predict the future, but that's what we aim for.
That's great. But we've got through all of the questions in the chat, and I think this is a great time to round off the presentation. So I would like to thank both you, Luke, and you, Sean, for joining us today and giving us the presentation of the H1 results, and look forward to welcoming you back to the HC Andersen Capital platform soon.
Thank you very much, Philip.
Thank you very
Thanks
much.
to everyone that joined.
Thank you.